Hello and welcome to Simply inTAXicating. The Indian Budget 2019, the first for the second inning of the NDA government, is scheduled for July 5th. It's also going to be the first Union Budget to be presented by Nirmala Sitharaman, the Union Finance Minister. She has a lot of problems in hand. The economy is going through a very bad patch. There are unmistakable signs of slowdown in the economy if you look at the various macro parameters. The job creation is of course one of the priorities, but unfortunately the manufacturing sector is not doing well. So what is to be done? Of course, lots of private investment and the FDI. But if we look at the UNCTAD's latest World Investment Report 2019 for fiscal year 2018, Asia has accounted for almost 39% of the global FDI inflows. A significant jump from 33% to 39%. But a major chunk has gone in favor of the Chinese kitty. So India has to do something about it if India is keen to attract FDI. And one of the factors which perhaps can assist India is reduction in the corporate tax rate for the foreign companies. The Indian industry has been demanding a reduction in the corporate tax rate even for the domestic companies, which works out to about 48% if we club it with DDT tax. So looking at all these aspects, we have three domain experts. We will try to find out what is expected on the direct tax front and what is expected even on the indirect tax side, particularly the customs and the GST. We have Mr. Sumit Dutt Majumder, former chairman, Central Board of Excise and Customs. We have Mr. Rohit Jain, partner, Vaish and Associates. We have Mr. Sridhar, very popular face in the indirect tax domain. So let me start with Mr. Rohit, because direct tax is going to be the flavor of the season. So how do you look at this? Particularly, Mr. Jaitley had talked about the roadmap for the corporate tax. Of course, partly he fulfilled his promise. He did it to some extent. But large corporates and MNCs and the foreign companies, they have still their grievances. So do you think that that kind of revenue comfort level is there with the Union Finance Minister to give away some revenue in terms of reduction in the corporate tax rate?
No, actually, I was going through the data for the direct tax collections. So as per the data which has been released in December 2018, the direct tax collection was stated to be 10.202 lakh crores for the financial year 2017-18, as against budgeted figures of 10.05 lakh crores. So there was a small shortfall, but I think more or less they made up for this. For 2018-19, I was not able to find out the exact data, but I understand they may have touched upon or made up the collections. Now coming to that important step of reduction in the corporate taxation. Now in 2015, when the budget was announced by Mr. Arun Jaitley, so he announced a roadmap of 4 years to bring down the corporate tax rate from 30% to 25%. So 4 years actually is this is the year when these 4 years complete.
Yeah.
So I think there is a huge corporate demand for reduction of corporate taxation for everyone from 30% to 25%. So vis-a-vis as it being applicable to specific corporates presently. Now coming to the foreign companies, of course, 40% is a huge tax rate coming for the corporate taxation. So I think there is a huge demand and they may be justified in seeking a reduction of taxes. To what extent that reduction is possible, I think that she will have to work out the numbers. But 30% I think is the reasonable demand which the corporates are demanding for foreign companies, and which I think she must look into it. Now coming to the individuals also, I think individuals are also making a demand. Presently the maximum slab is 10 lakhs of rupees. So either that slab may be increased to maybe 15 lakhs or 20 lakhs of rupees. That will increase compliance. In fact, if you see the compliance vis-a-vis the ROI filings also, return filings. So as per the data released by the government itself, the filings have increased by 65%. So which was earlier 3.31 crores in 2013-14. So it is stated to have increased to 5.44 crores. Okay. So as you reduce the taxes, the compliances would increase. So that I think aspect also needs to be considered by the new finance minister, either to increase the slab from 10 lakhs to 15 lakhs.
That is
or
for the
20
highest
lakhs,
tax rates.
highest tax rate slab, or to bring down the tax rate from 30% to 25%,
Okay.
if they were to bring it down for the corporates. So I think these are the two most popular demands from the industry and
which
the
maybe
personal
probably
taxation.
something will come
Then we
out.
can discuss the specifics.
Specifically. Mr. Sridhar, I mean, what is your hunch?
I would say it's more of a request of the industry. The MAT legislation post Ind AS is such a complicated piece of legislation. You cannot find the old 115 JB reading the new one. It refuses to appear to a person who reads the law also. There is so much of accounting in the entire law. One really wonders what happened to the original conceptual thought of 115 JB. Now it has been made so complicated with regard to the adjustments.
Correct.
Now, is this the real intent with which we started 115 JB? The original idea was to ensure that companies who are really doing well pay some tax. Correct. Because they are also paying dividend and they don't pay corporate income.
Absolutely.
We have lost track of that and we have come to such a pace of legislation which is so highly unwieldy. Even to a certifying chartered accountant, it becomes a nightmare before the forms are signed and it is uploaded on the net. So from an industry perspective, MAT has to, I don't want to, generally I take this view that sovereign decides the tax rate. So I am not like my friend. I don't want to talk about the tax rate. But at least where complications have been really perhaps been put into the law, I think there is a chance that we can look at them in a wholesome way. This is as far as
MAT is concerned. You're not looking forward to any sort of drastic measure like abolishing this MAT?
At this stage,
from the statute
at this stage, it may not
but
be.
Maybe the simplification side you are looking at. Okay.
Because it's the first year of the new government. They would like to take so many things. And as you correctly said in your opening statement, what are the macro priorities? If the companies work, if the government at large is going to help the country to get to the macro priorities first, there is no way you can do everything in one budget. Right. So you will have to.
So Mr. Sridhar is suggesting, the abolition in any case is no chance because the amount of revenue the government is garnering out of MAT, and that makes it such a huge chunk. And given the target, the revenue target again this time, the direct tax side, it will be impossible. The moment you get rid of MAT, then you are going to lose a major chunk of the total kitty. Yeah. So probably simplification could be a good solution.
In fact, that is very important. I wanted to touch upon this on a later part, but as sir rightly pointed out, MAT today is so complicated, particularly in light of the Ind AS coming into force. Now, once the Ind AS compliant balance sheets are there are reclassifications which happens. Now, we have moved away from the concept of historical concept now to the fair value concept. And then there are reclassifications of say preference shares, debentures. Debentures are sometimes classified as shares, capital. Right. And then there are notional gains or incomes which becomes which are required to be considered. Right. Now the clarifications have come by way of circular. And circular, if you see circular on 2 or 3 aspects itself is self-contradictory. So I think what is more important, I think from taking cue from what sir said is, it's a simplification which is most important. Either you say go by what is Ind AS statement and make some specific adjustments and pay the taxes, or you say that you go by the historical concept, earlier balance sheets, and then pay the taxes accordingly. But making it too complicated because of recharacterization of various kinds of items, I think this is, and it is very challenging to prepare a correct MAT return. Abolition, of course, is not possible because there is a reason why MAT was introduced, more particularly in case of companies who were not paying taxes under the normal provisions. Right. So it's basically more of a comparison. What can at the most be considered, I think, 2 issues which have been, with requests which have been made by the industry, is the indefinite period for carry forward of the MAT credit. Right. So that I think is one demand which is there from the industry. Second demand is also with regard to the rate of MAT tax. If at all that bad tax, if at all can be reduced, that also may be a huge relief to the corporates.
Mr. Sridhar, we will touch this point again when we talk about the DTC. When we have the direct tax code, it's a new legislation, whether we should have this kind of legacy issues like in case of GST. So sir, since we are talking about this, and he also touched about the slab and individual taxpayers. Looking at the tax base in case of income tax, it has gone up to very close to 6.8 crore, and this is a very large tax base. now the fact that voluntarily people are filing income tax return, and also the fact that people are paying taxes, that is how, sir, if you look at the growth path, of the graph particularly, the personal income tax side, so there has been a huge jump. So corporate tax, of course, it's there, but it is not growing as rapidly as the personal income tax. So, sir, looking at this, are you expecting that this kind of relief should come to the individual taxpayers also, and there is a need for more money in the hand of the people, the common man, who could go to the market, do some shopping, and the demand could be re-kicked so that the economy gets a fresh kick? So I mean, how do you look at, sir? Because you have also you are an economist also, sir. Apart from the tax man, you have a lot of interest in the macro side. So I'm looking at all these aspects, sir. As a taxpayer also, and as a senior citizen, what do you expect, sir?
Well, the starting thing, see, taxation is one of the aspects. Now, taxation is needed by the sovereign,
right, sir,
for doing the development work. At the same time, the economy has to be geared up. And for that, one has to take care. There are various ways of how to boost up the economy, how to bring more investment. And taxation has only limited role in it, either by increasing or decreasing. But I'll come to the broader part later, and I'll come to your specific question,
sir,
although that's not my domain. But I can see one grievance,
sir,
about a class of people. I don't know whether you have faced it. The slab of income, there should be one more slab for income, because one is that, what are the two slabs which that there? After that, it becomes 30%.
yes, sir.
10 lakhs.
10
Beyond
lakhs.
10 lakhs,
Is 30.
Yes, sir. Yes, sir.
So there should be another slab in between that, so that 10 to 20
Okay.
or 10 to 25. So otherwise, you see, you are putting, I mean, if I take the name Mukesh Ambani and some of us at the same level,
Correct. Absolutely.
which is not the situation.
Right, sir.
So there should be one more slab. As a common man, I'm not an income tax expert, but I feel that it is there in the minds of many people.
Right.
But at the same time, as I said, as a former taxman, a taxman's always concern is that how the revenue is to be garnered. And if we're talking about the indirect taxes, at the same time, or I will take
So
them
indirect
later.
tax, yes, I mean, you said you can
Okay.
kick a start, sir. Yes, sir.
Now, you see, again, taking cue from what you started today's discussion, that economy is not in a good shape. And as I mentioned just now, there are various ways of boosting the economy. So I'll restrict it to my the indirect taxation now. See, GST has given an opportunity to boost up the economy if properly implemented. And I must say, although the starting was not good, but over a period of time, thanks to the GST Council, corrective actions have been taken, so many things we know. But there are a few more things that to be done now that we are completing two years there. And the new finance minister may like to have a look at it, how to give relief and at the same time without jeopardizing your revenue. Now, a major default in the present GST is that one of the main raw materials in the manufacturing supply line is the petroleum products. This is still out. Now it's time. Constitutionally, it is already in. Arun Jaitley Sahab had done a good job in putting it in the Constitution. So now is the time, I think, to have a serious thought, and at least I would expect a statement in the Parliament in the budget speech that the government will make a serious. Of course, it has to be done with the way the GST Council, which means the states also will have to be on board.
Sir, right.
But here I may point out, I don't think the states, ruled by opposition, also will oppose it, because if you look at the manifesto of the major Congress opposition party, Congress manifesto on GST, they're very clearly written that they would like to bring the petroleum products inside GST.
Right.
So bringing petroleum products, you are in one stroke, the cascading effect of not giving the GST benefit, not giving the input tax credit all these days. Of course, it will have a revenue impact. But I feel that if you take some other steps and bring all those things under GST, like, in course of time, your electricity also should come. Your real estate stamp duty, which is a big problem, it's still with the states. Now, that also can be brought. Now, this will take time, but then if statement, so that, because bringing an alcohol is a demerit goods, but the constituents for making alcohol is not ready-made goods.
Correct.
And so why break the chain there? So
Right.
if you see the entire GST, the chain is not breaking anywhere. You will find a boost in the revenue automatically, and it will not hurt the people much. So this is
There will be more boost, sir, if we link that alcohol thing with e-way bill.
yeah, no. So what
Similar kind of system, where
yeah, that's true. I'll come to that. So this is the things, the inclusion of all these things, and now you correct the other things. You see, unemployment. Why has been so much of unemployment? I'm not on demonetization.
Right.
I'm talking about the GST. GST, you had a small, the threshold exemption for the small scale, small business up to 20 lakhs.
Right.
But you put fetters there. There are two fetters. One is that you can't do interstate supply of goods. Other is that if a registered person buys from the unregistered, which means the below threshold, then he has to pay reverse charge.
Correct, sir.
So these two fetters must go. In the case of interstate services, it has gone, but interstate goods, it has not
Supply
gone,
of goods
and the reverse charge, I think it was kept in abeyance, but a final decision and fetters free.
Okay.
The-
So you want that to be deleted, sir. Section
Deleted.
9(4).
No fetters on that.
Right.
This is the second,
Right,
should be there in the list. And the third is that rationalization of the taxes. Now, over 2 years we have seen, I mean, I must say, if you compare it to the other international countries and all, India has been doing quite well. I mean, you have not seen any shortage of food items, basic items and all. You have not seen the economy breaking down totally because of GST as it happened many places. But that should not give us the complacence. So there is scope for correction. Now, this correction is that 4 rates are too much. Okay, to start with, we are not sure. But now at least you keep top slab 28% for your demerit goods and some luxury goods, which are also demerit in some way or other.
Right.
And then the 5% for the poor person, the essential items.
Essential items.
That's all. I don't tinker with that. But this 18 and 16, 18 and 12, that perhaps, not
Should
perhaps,
merge
it should be blended
merge
into one.
Yeah, right.
That you will get rid of many classification disputes.
Right, sir.
Because there's no problem in identifying a demerit goods or luxury goods. But there's a lot of problems in identifying whether it will come under 12% slab or 18%
Right,
slab.
sir. Right,
So
sir.
this should also be done. Now, again, as I said, these will have to be done through the GST Council. But I would expect the finance minister making a statement in the parliament. The people will know that the government is thinking in that line. And all these things, all these things, I feel even the opposition ruled states also will not oppose.
They will not oppose.
Because these are all for the good of the people.
Right.
So these are my initial
Mr.
comments.
Sridhar, the crux of what sir suggested is that there is a need for some sort of a roadmap or a white paper on GST. How exactly the Prime Minister or the Indian government as a whole looks at GST, and what sir suggested that some of the major components where there is cascading of taxes, for instance, petroleum or electricity, or for instance, if you look at ATA, for instance.
ATF, yes, of course.
Aviation sector, for instance, real estate, for instance. So, I mean, there should be a clear-cut roadmap rather than ad hoc approach, like what happened to real estate recently now. Now there is a demand like a restaurant sector, for instance. Now they are demanding that there should be a dual structure. Those who don't want to pay 12% and ITC, you continue to pay 5% without ITC. I mean, people are demanding that. So the composition scheme, which is so, it's a kind of anathema to the GST design overall. Perhaps, that this is the time where the taxpayers themselves have started demanding that we want to pay taxes, but please allow us to avail
No,
this.
but Shailendra, the point is that it's not that this was not felt before. Even if you take the RCM on freight, somewhere in October 17, they gave an option. You can either choose the forward mechanism or the reverse mechanism.
Right.
So restaurateurs demanding that I should be given an option of 12% with credit or 5% without, in my opinion, seems to be logical, because the whole idea of breaking the chain is what really is affecting the whole story.
Absolutely.
Now, to supplement to what Mr. Majumder very correctly said, he touched upon very vital issues. But the more than a roadmap, apart from a roadmap in the parliament, considering that the first meeting is around the corner.
Correct.
Even before the union budget, after a very illustrious meeting of the 20th or whenever it happens, If there is a joint address by the center and the states
Right.
to the nation at large, that this is our roadmap on GST. This is our reform too
Right.
on GST.
Right.
This is what we intend. And of course, we would look at the time pace in along with the way the collections go, but this is our roadmap. A statement from the GST Council of all members put together,
Right.
the chairperson there, can make an immense impact on the industry and the trade with an assurance that no, this economy is going on the right track.
Absolutely.
And as far as GST is concerned, I'm very proud as an Indian, we have done fantastically well on GST.
Absolutely.
As an Indian, it gives so much of pride that where so many economies have failed, we have succeeded. All is just tying up what we can tie up with. And as a matter of fact, on these programs previously in TIOL, we have raised two major issues. Keep structural reforms into two baskets.
Right.
Low-lying fruits,
Right.
real structural ones.
Right.
There are so many things that were real structural ones. We need to really wait and see how the economy, how the trade at large is going to pick it up. One major issue would be invoicing for entities having greater than 50 crores of turnover from the GSTN.
Right.
That looks so structural.
Right.
But there are so many low-lying fruits where so many courts have raised issues. So many advanced rulings have thrown up so many questions. Those low-lying fruits can be brought up.
Right.
And through a couple of meetings of the GSTN Council, if appropriate recommendations are made for changes in legislation, issues which are really burning the industry, ITC with regard to ITC. There's so many dimensions on ITC.
Right.
High courts have issued notices on 16(2)B validity, C validity. Why do we need to create why do we need create that situation? Can we not make the entire ITC section 16 and 17 more friendly?
Right.
Which
Okay.
we have been. There is one issue which we have highlighted in this forum. This has been told so many number of times, day before yesterday or I don't know when. The West Bengal Advanced Ruling Authority for Appellate Authority rulings, there was a difference of opinion between two members. They said, no, we can't give an opinion.
Correct.
But look at the assessee. Let's not look at ourselves. Look at the assessee who's before. He's gone there for certainty. Now he's back to square zero.
Yes.
Now, how do you expect an assessee to handle this?
Go to High
He'll go to the High Court of Gujarat.
Absolutely no
This is exactly what the Honorable Prime Minister and the Honorable Chairperson and the Honorable Chairman of the GST Council
right.
wanted to avoid. People
Correct.
rushing to the courts for a solution
Correct.
when you can provide certainty.
Correct.
We are still going back on it. So these kind of low-lying fruits and impending problems on the economy. There is so much of talk between February, March, April about this vexed subject once again of post-sale expenses. From the days of the positive regime of service tax, once again that subject has picked up so much of mileage. In the sense that because of different views, post-sale expenses, treating it as a separate transaction. You are creating a huge doubt in the mind of the man who's paying tax correctly by treating it as a part of his cost and paying duty on it.
Right.
So you are creating another doubt in the mind. And now that is really being deliberated so much, for which where there is no real necessity at all, because this has been going on for the last 15 years. At least I can say from the day, before the day service tax was even there, post-sale expenses were there. So next is the major reform of e-way bill, which is going to take place on 21st of June, that if there is a default by one of the parties, then they cannot raise e-way bill. This is a very major reform. So only thing is that there are certain doubts that if the supplier is a person who is compliant, the recipient is not compliant, and his number is there. So if there is a refusal by to take out the e-way bill, how can the supplier be responsible for that?
Right.
Because he is the person who is raising the e-way bill. He has dispatched his goods. In case the recipient, he could be anybody who would be, it is not necessary, because everybody buys intermediates, everybody buys inputs, everybody buys finished goods.
Right.
There is no question. The second every recipient or every supplier has to be, that's the right way to put it. Every supplier is responsible for his compliance. So I can't do anything which is beyond my locus standi.
Right.
So if you look at those larger issues, then step-by-step change. One thing which missed, step-by-step change, I thought Mr. Majumder would, I don't know how he has missed this compensation cess direction.
Okay.
I mean, we are at the end of 2 years, as Sir correctly put it. Sir knows better than us. So what do we do at the end of 5 years? Now, by the time you turn around, it will be over. So then what happens to those, what's happened to those products which suffer compensation cess? What is going to be the future of those products as far as there, not all of them are demerit goods.
Right.
Not all of them are demerit goods.
That's a very important point, sir. You'd like to discuss
Yeah,
now?
I just, I mean, I would expect that. What is the compensation says? Compensation says is that the center has to pay compensation to the states whose revenue has gone down because of GST. And then how will center get the money? So I will identify, the center has identified certain items on that cess will be there. So the moment, because the commitment is up to 5 years.
Right.
So the moment 5 years is over, so there's no need for compensating. As a matter of fact, it is expected if the GST is functioning well and it being a destination-based consumption tax, most of the states which are now lagging behind, they will be having, which is happening also. The states like West Bengal, Bihar, they are getting more tax share because of the destination base. So the need for compensation would be less, and in course of time it will go. So automatically there should be a clause to make the things clear what Mr. Sridhar has raised, that when there will be this goes, automatically compensation says should cease to exist. It is for ad hoc, for this purpose.
Right, sir.
This is one. And another point I would just to highlight, taking a cue from Mr. Sridhar, say, is a very good point, that you see return filing. Now, return filing that July to September, that transition plan is absolutely fine. So that it's somewhat like that you keep on trying it, and if there's any problem, it will cover. But then why go to that, which you pointed out, that 50 crores and above you invoice, and less than 50 crores also you have to do this thing. So this will be creating a lot of, let us first stabilize step by step. That I like the word step by step.
Right.
So, I mean, suddenly you let the GSTN also stabilize. So concentrate on that. And invoice generation, I think, I don't know what is the disparate thing that has to be done.
They have to do it now.
So many sections the GST and the GST Council can address. For example, we have had a very well deliberated 9 and 9C of 1780. We are hoping the entire trade and industry would be able to file by 30th of June. There are so many talks of even of a request for postponement, which of course looks very unlikely. But the fact is, the experience of this 9 and 9C has to be carried forward to the next year.
Right.
Has to
Absolutely.
be carried forward to the next year. And ideally speaking, the best way to look at it is with the transition plan as announced by the board and by the council at large, keep these returns going and expect a 2018-19 closure. You don't have to wait up to 2020 June. You can prepone it to March if our systems fall in place.
Right.
So by 31st of March 2020, if our 18-19 were to really fall in its place the way that we want, by the click of the button, as they say, in terms of reporting and practices, in terms of accounting, then maybe the second stage or the third stage, as you want to say, of higher electronic reform, you can even think of.
Yes.
But that has to be commensurate with the industry falling in,
Right.
and the trade falling in with the whole approach. In this whole thing also, we have totally forgotten. There is one thing that we have never discussed in any of these forums. We haven't had one TIOL program of how an assessing officer will react after the whole set of returns come.
Okay.
That's
That
a
we will do
huge
also.
black box.
Okay. Second-
That's a huge black box that sits in front of us.
True, true.
We need to really see how one assessment picks up,
Right.
how the states view their SGST portion.
Yes.
What are those interpretations? We have always looked at, we have taken feedback as a responsible reporting people. We have taken feedback from the assessees at large and put forth issues.
Correct.
But what about the states when they look at the returns?
Correct.
What brings in, what more views will come in on various aspects of the transaction? For example, this concept of subsidy directly. That is opening up a new issue of various doubts that are coming up in mind. And the question of discounts, which is still not resolved.
Correct.
How the states are going to look at discounts under GST. So you need to really pack up your third and the fourth year for your reflection of views from the states.
Yes.
Take it to the GST Council. And once the states pack it up, because if you ask anybody outside in the market, it appears to be that the entire thought process, the intelligence, the entire thing, it looks as if it is centrally driven today. The assessing officer who's 2,000 kilometers away definitely has a viewpoint.
Right.
You need to listen to his wonderful intelligence.
Yes.
So you need to get that back on board. then maybe the stage is there for stage 3 reforms. I think by jumping the gun, we will be doing much more injustice rather than helping the...
Okay, I quite a few valid points, sir, but let me go back to direct tax.
Yeah,
side,
please.
sir, which is
It should not look like an indirect tax panel.
which is going to be the princess component of the Union budget.
Yeah.
Yes. So Mr. Rohit, you have going little deeper into the nitty-gritty and the technicalities of the direct tax provisions. Anything specific you look forward to?
In fact, there are many issues which there is an industry demand. For example, first foremost demand is CSR expenses. Now CSR is mandatory for all the companies.
Correct.
At the same time, it is not allowable as expenditure. So the corporates have been demanding that this seems to be a contradiction, that while on the one hand they are required to mandatorily spend the money for CSR, and that is not allowable as expenditure. So that I think is a long pending demand that should be allowed as reduction. Second, in fact, important demand is the dividend distribution tax. Now dividend distribution tax, if you see, is a multiple taxation. Once the corporate pays the tax, then there is a dividend distribution tax. Now there is a third taxation also in the hands of the individuals above a particular threshold who receives the dividend.
Right.
So there are 3 layers of taxation on the same income.
Same income.
So I think if at all we cannot do away with dividend distribution tax, the demand is that it should be reduced, and reduced substantially from 20% to 10%.
Okay.
And a related demand is that it should be multi-layer credit should be allowed. So if company A pays to company B, B pays to C, and C to D, then there should not be multiple taxation. The credit should be allowed to them rather than the company D again paying a dividend distribution tax
that makes sense.
on the amount which they receive. The one important demand is the deduction or the investment allowance which is allowed under section 32 AC. That is allowable for computing your normal income. That should also be allowed while computing your book profits. Because if you don't allow that deduction while computing your book profits, actually you have the amount which you have spent on a notional amount, you are asked to pay book profits.
Correct.
That I think is also one of the important demands. Now from individual personal taxation point of view, I think one important lacuna in law is when you sell a property, when an individual sell a property, he is required to pay tax on the deemed consideration, which is the stamp value.
Right.
Now the market, as you know, the real estate market is in a bad shape. So supposingly 100 rupees he actually recovers on sale of the property, whereas the stamp value is 150 rupees. Now he pays taxes on 150 rupees. Now the Income Tax Act says that you can invest the capital gains in another property and that will be exempt from tax.
Right.
Now while you are taxed on 150 rupees, how do we apply the provisions of section 54? Whether you are required to invest 150 rupees or 100 rupees.
Right.
Because this law says that you have to invest the capital gains. Now what he has not received, how can he invest?
There is no gain at
There
all.
is no way he can invest that money.
True.
So I think that's a lacuna in law. I think that needs to be resolved. Then for example, in professionals, case of professionals, there is a presumptive taxation.
Right.
I am actually a very strong supporter of a presumptive taxation because that simplifies the laws and gives you a minimum taxation. Professionals, the limit is 50 lakhs of rupees. I think that needs to be increased. 50 lakhs may be increased to 1 crore or 2 crores. I think that is one of the important demands. Again, 54 EC, which is the investment of the capital gains.
Right.
Now 50 lakhs was introduced way back. 50 lakhs is hardly, if you sell a property, 50 lakhs is hardly a big amount.
Correct.
So that I think also needs to be increased, maybe 1 crores or 2 crores. 80C limits again is 1.5 lakhs. This also needs to be increased. Because once you give these kind of incentive, ultimately the money is being invested.
Right.
The money is being invested into the economy, and that actually, the economy also works. So it's not, one should not see on a micro level that the taxes are being are going to be reduced, but at the same time the person is going to invest.
It has a multiplier effect.
Multiplier effect.
Yes.
So these are some of the, in fact, one of the major issues which is bothering the industry is the IBC.
IBC, okay.
Insolvency and Bankruptcy Code. Now one of the basic theme of IBC is bidding process.
Right.
And in the bidding process, what happens is there is a haircut. The banks come out with haircuts. So supposingly there is a liability of 1000 crores settled at say 600 crores. Now what happens to those 400 crores?
400 crore haircut.
Am I supposed to pay taxes on that 400 crores?
Right.
The entire viability is dependent upon whether I am or I am not supposed to pay tax on that.
So, you are
400
looking for
crores.
a corresponding amendment in the IT Act.
In fact, there have been amendments. The two amendments which they have done pursuant to the IBC provisions is, one is they have amended section 79, which says that if there is a change in the shareholding because of the company going through the insolvency process, that will not affect the carry forward of the losses.
Okay.
That is the amendment they have done. The second amendment they have done is, the legislature has done is, the MAD provisions have been amended to provide that in case of a company which is going through the process of insolvency, they will be allowed the set off of both unobserved depreciation and unobserved book losses.
Okay.
So these are the two basic amendments they have done. But insofar, the major issue of concern is, one is this taxability of those haircut amounts,
That's a
both
major
for
issue.
the purpose of computing the normal income as well as for computing the book profits.
Book profit, right.
And there are views divided, because one view is that for the purpose of normal taxation, the recent Supreme Court decision in Mahindra, which says that this is nothing but a cash loan which has been settled at a lower amount, there is no income. But the major matter of concern is the book profits, because ultimately you will have to write back that amount.
Right.
So I think that needs to be clarified rather than it going into a litigation.
Correct. That's a very
Right
valid
back
point.
of debt would give a mad turn.
Yeah, absolutely. Yes, that's an important point. Yeah.
So these are, I think, some of the important points which I just wanted to highlight, apart from the issues which in fact, income from house property, the set off, the limit is 2 lakh of rupees. Earlier there was no limit. In fact, if you convert 2 lakh of rupees, it amounts to loan of rupees 20 lakhs
Correct.
or at the most 25 lakhs.
Correct.
Whereas normally a person tend to take a loan of 50 lakhs or a crore for purchase of the house
Correct.
property.
Absolutely.
So I think these are some of the, there are small changes I think this needs to be done in order to
give a boost to certain sector, and particularly a sector like housing, which has run out of oxygen. I mean, that badly needs that.
Correct.
Section 24,
Section 24.
the relief.
Section
the
24,
housing,
I think
the interest component of it. That's very important. Yes. But sir, for a common taxpayer, honestly speaking, three of you, for a common taxpayer, the present threshold, as what happened in the previous interim budget up to 5 lakhs, etc. They talked about. But what do you expect? I mean, there are chances, as per the various studies and speculation, and as Mr. Rohit rightly suggested, the tax base ballooning up to 7 crore, which is a very large figure. What should be the ideal threshold today, sir, for income tax exemption, outright exemption? No return filing, no deduction, no bookkeeping, nothing, no record.
that is the presumptive taxation, I think.
The exemption threshold, which is exemption threshold.
If you had to really ask from a government revenue perspective, anything more than that.
That slab in any case is not giving you
So
much
actually,
revenue.
what I was looking at after hearing Rohit Ji, because it's enlightenment for me, I don't know much of direct tax. I think if you have as a common man's view, there is inflation. Everything is going up. Prices of things are going up, everything. So going by that, all the reliefs, benefits which are there, they should be commensurately increased.
Okay.
Raised. If that is there, some relief will be there. I mean, it should happen automatically.
Automatically, okay, right.
This is one point it struck me after hearing him, because all the things he was saying.
No, but it doesn't happen that way, sir. In fact, like for instance, he said about the interest component for housing thing, it has been capped at 2 lakhs now. I mean, that makes no sense.
No, what I'm saying, the general things, the prices are going up.
Everything,
so
sir, yes,
keeping
sir.
that in mind, you raise all those reliefs which are there.
No, even the Transport Alliance, it took several decades for the government to increase it from 800 to 1600.
And for threshold,
if you take a bus or maybe the metro, the 1600 bucks is hardly an amount.
Right.
Which even
and for threshold, I mean, it's maybe a very unpopular comment, but I would say that the whole idea of taxation is there to increase your tax base.
right.
So I don't see any reason why the threshold should be increased so far as income tax is concerned.
Why it should be increased?
It should not be.
It should not be increased.
Because if you increase, your base will be shortened.
No, but so the very interesting figure, the data is with Rohit. In fact, what I remember is that if you look at this, the data which was released by the CBDT, that about out of 6 crore e-filers, almost 2 crore returns were such that where not a single penny tax was paid. So how exactly it is helping the cause and the interest of the exchequer, sir? It is not helping the revenue cause. If 2 crore people simply filing return and not a single penny of tax.
How will it happen like that?
Why not?
Because
There is exemption threshold.
Exemptions.
exemption is up to 10 lakhs.
No, sir. There is no exemption up to 10 lakhs.
No, sorry.
There are deductions which are available.
Deductions
So-
are
Yes, I
available,
know.
sir. Yes, sir.
But
Yes,
no-
sir. Let's say up to
No,
5
but
lakhs. Sir.
my point is that
Sir.
you should not give much relief anymore because your tax base should keep on increasing.
No, but sir, people are just having that kind of tax base, sir, where people are not contributing even a single penny to the kitty, then it doesn't help.
No, then the policy will have to change in such a way that.
And when, sir, you're saying that the compliance is growing, then you have to give more relief. Other tax filers will lose interest. And then, sir, there is no commensurate, as you rightly suggested, there should be a commensurate increase in
the
various kind
relief,
of
the
allowances,
relief, right.
whether it is housing or whether it is
No, I
interest.
was thinking in terms of that, how to increase the tax base.
Tax base is fully increased now, sir.
No.
They are very happy now. They are very happy. The government is very happy with the tax base.
But some of the figures are very surprising. For example, people who are filing showing income more than 1 crore. I was going through it, it is only 1.4 lakh.
Yes.
In a country having population of 130 crores.
Yes.
Only 1.4 lakhs of the people filing returns over 1 crore.
that-
If you
because of
do a
Benami.
further drill down, most of them would be salaried people.
Yeah, absolutely. Absolutely. That's because of Benami. So on this note, so let me thank all my 3 guests and for wonderful suggestion for the Union Finance Minister, Nirmala Sitharaman, the first budget, big challenges, but she cannot disappoint various segments of the taxpayers. And corporate, of course, the MNCs, the foreign companies, they have been demanding it for several years that the corporate tax rate should come down. Looking at the revenue comfort levels, you will have to take a call if India has to be as competitive as other Asian countries or other Asian countries. So looking at that aspect, the Indian corporate side also, they have a very legitimate demand that the MAT needs to be simplified and the MAT rate has to go down because it has reached a level where it is little more strenuous for the exchange, for the corporates' resources. Ultimately, the corporates, tomorrow the government expects the corporate India to go for fresh investment or a greenfield project. They will not have enough resources ultimately. So looking at the larger macro variables, she will have to take a call, which is certainly a difficult call. But so far as individual taxpayers are concerned, of course, a lot of promises were made during the polls, and otherwise also looking at the tax base, she has a very good comfort level, a good cushion to give a significant range to the basic exemption limit, and also in the process the capping of the housing loan side, the interest side, the 2 lakhs rupees, that may be relaxed a bit. Looking at various allowances which have not been enhanced in last few years, perhaps that could be enhanced. Idea is that more money should go in the hands of individual taxpayers, the common man, the citizen, so that the demand could get a boost and a real impetus could be given to some of those capital formation, the expansion, so the economy could come back to the same orbit in which we had. Because looking at the last quarter GDP figure, we have gone down to below 6. That's a scary figure if we look at all the promises. But yes, the direct tax side, a lot of changes she could do, and which could be finally transplanted into DTC, and that report will be submitted by this month end, the June end itself. Perhaps that could be some part of it, could be a part of this income tax. Looking forward to very positive and growth friendly and taxpayer friendly budget, Indian budget 2019. Thanking you all for watching TIOL Tube. Thank you, sir.
Thank you.